To a bummer of a Friday on Wall Street, right? Look at all the numbers here. Everything's red. The Dow is down. The S&P is down. The NASDAQ is down, cratering. Why? The news today that interest rates could keep going up because of new jobs numbers that came out. That's not to say the jobs numbers are bad. Look at this. They're really not. 263,000 is pretty much in line with what we thought we'd see. A job market that is slowing down, but not one that is tanking. Unemployment rate's also super low. Look at that, 3.5%. You know the last time it was this low? Before man walked on the moon, May 1969. President Biden doesn't seem too worried about it. He was at a Volvo plant in Maryland. He was praising this recovery after the pandemic. He says the economy now, the thing they got to do now is transition.
We have to move from historically strong economic recovery to a more steady, stable recovery. We need to bring inflation down without giving up all the historic economic progress that working class and middle class people have made. And that's exactly what we're seeing.
Our Tom Costello is here to talk us through this. So, Tom, we said it, right? The job numbers are not bad. So why is Wall Street freaking out?
I'm going to give you a tease. This is what my first two sentences are.
Real newsman here.
Two sentences are on NBC Nightly News. This is what I'm going to say tonight. The good news, the unemployment rate dropped to 3.5%. The bad news, the unemployment rate dropped to 3.5%.
Okay, Riddlemaster.
And you're thinking,
explain that to us.
Okay, so you're thinking, well, why? What the heck? How could that be bad news? Yeah, we have essentially full employment, right? But we've been hoping that the Fed would have some success in bringing down inflation. They've got one tool to do it. It's a sledgehammer. Right. They raise interest rates. By doing so, they hope that that will cause people to stop buying and companies will slow down on hiring. That nobody wants to see people lose their jobs. But when you've got full employment and everybody's spending and everybody getting a raise, inflation keeps ticking up. So ideally, the Fed would like to see unemployment go up. And that's the challenge. Because the rate was so good today, there's no chance that the Fed is going to stop raising rates. They're going to keep hiking them as we speak, probably at the next meeting on November 2nd, probably another 1 to 1.5%, another 1.5% by the end of the year.
This inflation report is coming out next week, the new one. Do we think it's going to change the game in any way meaningfully?
No,
okay.
No, especially not after today's numbers. I think we're going to probably see a report that suggests that it's still hot inflation. Maybe it came down slightly. Who knows? Listen, we can break down who's hiring and who's not. And that is kind of interesting because, again, 263,000 jobs created. We had 500,000 jobs created in July, so the rate of hiring has slowed. It's still strong, though. Look at this, 83,000 jobs in leisure and hospitality, 60,000 in healthcare. That's pretty strong. Professional business, 46,000. Who's not hiring, losing jobs? Financial, transportation, and education. We still are in an inflationary cycle. Because
of that, and because of what we're talking about here, that all systems seem a go for the Fed to raise rates again when they meet in early November, we can expect the unemployment rate to go up, let's say early next year, right? I mean, isn't that kind of how this works when the Fed, that's like an intentional, the Fed knows that's what's going to happen. That's not a surprise.
Yeah, the Fed is hoping, again, nobody wants to see people out of work, but the Fed is hoping the unemployment rate ticks up to 4.4%, and that would suggest people will start slowing on their spending, companies will slow down on their spending, stop paying people so much, and then the economy will cool down and inflation will come down.
So what does this mean? Let me pull a classic Tom Costello and make my own graphic. It's the letter R, the R word. What does this mean for the potential for a recession that I think a lot of people are talking about?
It should be red if you're going to do that.
But what does it mean, right? Does it mean anything, or are we still in this sort of weird limbo where maybe it's a recession?
So is the Fed, by increasingly hiking rates so dramatically and so fast, is it pushing us into a recession? Possibly. But the jury's out on that. And here's part of the problem. Some of this economic data that they make their decisions on is lagging. So it may not be, they may not be always acting on real-time, immediate data today in the economy today.
They're looking at the previous month or the previous.
It's a month ago.
Right.
So by the time they make their decision and they keep hiking rates, guess what? The economy's already slowed and the data hasn't yet come through to prove it.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.